We normally hear the Fed tell us that the economy is growing in a modest or moderate way. In this case, it is both. All 12 Fed districts have reported continuing economic growth since the prior Beige Book period, the Beige Book says, with a majority indicating slight or modest growth and 4 districts indicating moderate growth. I'm not sure of the exact difference, but that's what they're saying. 4 districts explicitly noted that the pace of growth had slowed since the prior period. They're saying that residential real estate contacts observed weakness as buyers face high profits and rising interest rates. Retail contacts say that they have noticed some softening as consumers face higher prices. And businesses are citing labor market difficulties as their greatest challenge, followed by high prices. In terms of labor markets, most districts reporting employment rose modestly or moderately. There are those words again in a labor market that all districts described as tight. One explicitly reporting the pace of job growth had slowed, but most of the others saying that there are still signs of tightness. And as far as prices, which is the big story, of course, for Joe Biden, as he told us yesterday, and Jay Powell, most districts noted that their contacts reported strong or robust price increases, especially for input prices, a continuation of a trend, they describe it. However, 3 districts observed that price increases for their own goods and services had moderated somewhat. So we're seeing maybe just the very, very, very first signs of a little daylight creeping across the horizon. But for right now, the economy is little changed from where it was.
Is there any sense here that we have a breakdown of maybe where we're still seeing some spending, that sort of debate between services versus goods?
Well, we are starting, according to the data, to see a little bit more in terms of services spending. The Beige Book not making it clear whether they see a drop in goods spending or not, but that's the kind of thing that we're looking for at this point, and we shall see. One more line I wanted to show here, that 8 districts reported expectations of future growth had diminished. Contacts in 3 districts specifically expressed concerns about a recession. So if you're going to take any line away from that and you're in the market, it's probably going to be that. Given what Jamie Dimon said today, you're going to have some maybe black clouds hanging over the rest of the trading day.
Mike, put this into perspective for us with some of the other comments that we get out of Jim Bullard, for example, saying that hikes now just mean cuts later.
Yeah, it's interesting to hear him appear to reverse course. It's only going to be a question of how fast they move, which nobody knows at this point. We know they're going to do 50 and 50, and we know they want to get up to neutral, which is somewhere in their definition around 2.5 or a little bit higher. Bill Dudley said this morning in a Bloomberg op-ed article that we should go over 3, go over neutral. But the question is, when do we see that they have started to do enough? How soon does the economy start to respond? And the market wants certainty. The Fed's not going to be able to provide that, probably.